Another day, another bank run. This time in Toronto. Have no fear, because in the world of financial madness, this will be supported by the liquidity of the central banks. Sleep well, my friends. You came here for the truth, so let me unveil that for you. Today we are going to talk about bank runs. And in this case, we are referring to Home Capital Group. When you see the deposits of any banking institution declining at this pace, this is known as a bank run. The mainstream media, the corporations, and the government may pose this as a little issue, a little problem with liquidity. However, I would disagree. There is no other way to put this than a bank run. And so, let's dig in to the issue of Home Capital Group. You may have heard a lot about this. Many subscribers have asked me to discuss it. I want to cover a few points that I believe are integral, beginning with this. The company estimates that only $192 million will remain deposited in its high-interest savings accounts, down from $1.4 billion 2 weeks ago. In a 2-week period, you have it going from 1.5 billion, 1.5 billion to 200 million. Think about how drastic that is. There is a serious bank run going on right now. No money will be left, and the shortfall is being made up by none other than Ontario's largest public sector pension fund. And it doesn't surprise me. Right here, you have the balance deposit with GICs offered by its subsidiaries stood at $12 billion, down 220 million since April 28th. Again, a lot of money is being pulled out. People are worried. They think that their investments are not secure, and they go for a bank run. Even if the government came out and said, we will bail this bank out if it were to fail, doesn't matter. People still are scared, and for good reason. They pull their money out and they put it somewhere else. That's just the way it is. And right now, Home Capital dealing with some issues because of a scandal involving falsified loan applications. This should ring a little bell. When you saw what happened during the housing boom in the US, you saw all kinds of falsified loan applications. The data wasn't there. The institutions weren't looking into it simply because everybody was making so much profit. It wouldn't be wise to get into that. Look, as long as housing prices increased, nothing to worry about. So what's happening now is a little bit different, of course, than what happened during the subprime crisis. However, some of the core is still there, and it is rotting. So, here with Home Capital, I believe the issue has to do with the system and the way it's set up. And that is that you can have so much corruption, and you can have individuals who innocently put their money in with these institutions thinking that their money is protected and segregated from any sort of gambling, any sort of malpractice, but that's not the case. Home Capital, check this out. Home Capital uses money deposited into GICs and savings accounts to help fund its mortgage lending. When you deposit your money, whether it's at your local bank, whether it is with some sort of, you get a mortgage from one of these companies, you believe that everything is safe and sound. You're not going to have a problem with your mortgage as long as you pay the bills. And of course, your bank, the money in the bank, has a guaranteed deposit on it up into a certain amount. Nothing to worry about, right? Well, I don't believe that is the case, and this happens to be one very small example. I believe these problems will be more widespread in the future. Let's move on to this. couple points I just want to make very quickly regarding home capital. Home capital is what they call a lender of last resort. And this again rings that bell back to the financial crisis, or leading up to the financial crisis, with all of these Fannie Mae and Freddie Mac and all the rest, where we have individuals who couldn't get loans in a normal way. They have to go through these alternative means. And of course, there is more risk. Where there is risk, there is that fragility, and where there is fragility, there will be failure. I'm seeing that right now. Individuals are scared. They pull out their money, and we'll see what happens. And so it basically says that, basically what I said, where you have to go to a secondary type mortgage lender, and now people are feeling it. All right. Moving on very quickly, I'm going to get through this video here. Dollar doubles down. The explosion of dollar stores in the US has intensified the battle for these discount shoppers. And of course, as the years go on, you see more market share going into the dollar stores. People looking for deals. Of course, the dollar stores aren't what they used to be. Things used to be $1 at the dollar store, but there's now things that are $3 and $4 and so on, as the money devalues. However, the point is clear, is that people are looking for more deals. They're desperate. They don't have the kind of disposable income that they once did. And so you see an explosion in dollar stores. You'll see this as well. Dollar store adjusted operating margin. And the margins are thin. Doesn't seem to be doing much of an increase. Perhaps a small amount, but it doesn't matter. You'll see barely any increase in these dollar stores operating margin. Obviously, when you're charging very little for products, it's not there. So you have to make money on the volume, and perhaps they are getting that now as they have more customers than they were before. Just something I thought I'd mention. Grocery store have the same issue with their operating margin being around this 3% mark as they're showing you here. This tells me that they once again need to make money on volume. And I do believe that this will be a problem for a lot of these stores in the future as people seek better and better deals. They're not going to be able to necessarily get a lot of the products that are available. They're going to have to limit, and that hurts a lot of stores. Federal government current expenditures, interest payments. The interest payments on the debt has hit a record high. Think about this for a second here. In billions of dollars, $500 billion going just on the interest payments on the debt that it owes, which is all fictional. I mean, can you even imagine that? It's hard. Sometimes I have to just stop for a second and think of the whole monetary system from the beginning. Okay, so you take the money, it's created out of thin air, this sort of semi-government, not really private, is it, sort of, maybe, institution, lends money at interest, maybe a small rate of interest, maybe a large rate of interest, doesn't matter, lends it to interest to the government of that particular country, and then it says that you must use this. This is the only legal tender. So you use that money to then give to the commercial banks. The commercial banks then loan it out to you at a higher rate of interest, and it's impossible for all that debt to be paid off ever because it just accumulates and accumulates and accumulates. And here we go. That's the financial system in a nutshell. What a disaster. This will continue to get worse, and the problem will be exacerbated by every single financial crisis we are faced with. Those paid to keep costs down are gutting the system. Now think about this for a second. You have these two factors, management and faculty, number of senior management and ladder faculty. I believe this is referring to those in the education system, if I remember correctly now. Yes, the student loans, faculty. Anyway, what we are looking at here, when you see management in any sort of institution increasing at such a rapid rate, and then you see the faculty not growing as much. So think about all of the senior executives. There's more executives than there are teachers, than there are people in the administration actually helping out the education portion. And then you have all these executives who get all the big salaries and steal all the money, of course, gaining at a much, much more rapid rate. And that is very apparent here in this chart. Last but not least, when you talk about the education system, you'll see this. The Ivy League schools. OpenTheBooks.com. U.S. taxpayer subsidies, tax breaks, and federal payments to the Ivy League colleges. Looking at this between 2010 and 2015, total taxpayer-funded payments and benefits totaling, can you believe it, $40 billion. $40 billion has gone from you and I to them, to the Ivy League schools. I understand why they need to have good education. You want to have good schools. You want to have an educated bunch of people in your country, in your state or province or cities. I get that. But I can't help but feel that a lot of money in between the time it comes off of our income tax, off of our paychecks, and makes it to the individuals who need that money, most of it goes to waste. I'm sure that if you were to directly give people, not that I'm suggesting this, $40 billion, I'm sure you could devise a much better way to fulfill the systems that we have in place right here. In this case, just for these Ivy League schools, $40 billion. I mean, come on. Crazy. Okay, that's enough. If you found this video informative, please give me a thumbs up. Remember that when you give me a thumbs up, it helps to push these videos higher up in the YouTube search rankings. These videos are being essentially wiped off the map. It's unfortunate, but I'm still doing them. I'm trying to do it every single day, even though they are getting less and less viewers all the time. My heart's still in the right place. Doesn't matter. If you found the videos informative, this one, the previous one, the next one, then I know you'll find my books even more informative. So you can actually look through the books. Go over to Amazon. They have a look inside feature that will allow you to flip through the pages of these books to see if you like them. Take care.